Chart patterns, flags and pennants trading strategy. Pennant pattern. Before entering a trade based on this formation, you of course need to have a predetermined entry point, stop loss, and profit target. The first step is to measure the height of the flagpole. After the price has entered the consolidation area, which allows for the measurement of the flagpole, we set our entry point at 10% of its height, above its highest point. This should help filter out any false breakouts from the formation. Our stop loss should be 25% of the flagpole's height and is placed below the entry point, thus 15% below the flagpole's high. This will protect you from an eventual failure of the pattern's continuation nature. As for the profit target, we'll be using a scale-out strategy. Our first profit target is the amount risked, i.e. 25% of the flagpole's height. As soon as it is reached, we take out half of our position and we will move our stop up to the entry point. This leaves us with a profit of 25% of the flagpole's height on the first portion of the trade, while the remainder may drop to break even in the worst case scenario. The profit target for the remainder of our position will be equal to the length of the flagpole starting from its top, i.e. 90% of the flagpole's length up from the entry point. The 10% difference comes from the entry point being 10% of the flagpole's height above its high. Example. For this screenshot, we've used an hourly chart of the GBP to USD cross. The market broke out of an established trading range at 1 and formed a flagpole, bar 2. Once the price action later entered a consolidation area and it started reassembling a flag to pennant formation, we begin to calculate the pattern's elements in order to position ourselves accordingly. The flagpole's high is at 1.7098 US dollars, and its height is 48 pips. Thus, we enter at 10% above its height, or 5 pips, at 1.7103, as marked by the purple horizontal line. Our stop is placed 25% of the pole's height below the entry, or 15% beneath its high, 7.2 pips, at 1.7091, visualized by the red horizontal line. Our final profit target is 100% the flagpole's height extended above its high, or 90% above the entry point. Thus, at 1.7146 US dollars, marked by the horizontal green line. However, we said we will be scaling out from the trade as soon as we profit the amount risked. This means that when the prices rise by 25% of the flagpole's height, projected from the entry point, we will exit half our position and move our stop to break even. The initial profit target was reached at 12 pips above the entry level, or at 1.7103 plus 0.0012 equals 1.7115 US dollars, visualized by the black horizontal line. It was hit at bar 3, when we exited half of our position and moved our stop loss to break even, before our final profit target was reached shortly after. Flag pattern. Like pennants, flags also begin with a very strong initial move, followed by a consolidation area. The climactic bar which forms reflects the bull's dedication to buy, disregarding the price they are paying. They just want to be on the market at all costs. Such a move is often triggered by a major economic indicator, interest rate decision, etc. After the initial spike, some bulls lock in profits, which allows bears to try and bring the price down, but in many cases they won't possess enough selling power to overcome the bulls, which will eventually lead to the upward breakout and trend continuation. Due to the two pattern similarities in formation and outcome, they are also traded in analogous manner. Again, we first need to measure the flagpole's height. The entry point is above the high of the flagpole, with a distance equal of 10% of its height. The calculation and placement of the stop loss level is also identical to the pennants patterns. The stop is placed at a distance of 25% of the flagpole's height below the entry point, or 15% of the height below the flagpole's highest point. Once again, our first profit target is equal to the amount risked, projected up from the entry point, 25% of the flagpole's height. As soon as it is reached, we exit half our position and move our stop loss to the break-even level, entry point, so that in the worst case scenario, we are left with the profit from the first part of the trade. Once that is done, we aim for the second profit target, which again is equal to 100% of the flagpole's height, projected up from its highest point, 90% of its high projected up from the entry point. On the screenshot, you can see a reversed flag formation. Rules are important. In order to improve our chance of success with both patterns, it is crucial to follow up on the entry and stop loss guidelines we earlier underscored. It is of utmost importance to respect the entry rules to filter out potentially losing trades. In this example, you can see how a potential flag formed a flagpole, but an early entry at the high of the flagpole, disregarding our established entry rule, would have gunned our stop. The flagpole's high and low were at 1.6458 and 1.6310, thus its height was approximately 148 pips. According to our strategy, we should have entered at 10%, that amount above the high itself. But the market initially failed to rally to that point, thus you should abstain from going long. However, if a trader was so eager to hop on the market at the high of the flagpole that he would disregard the entry rule, he can't filter out potential failed flags. Say he entered at the flagpole's high, and he has placed a stop loss equal to 25% of the height beneath the entry point at 1.6421 USD, 1.6458 USD to 0.0148 USD times 0.25. It is visualized by the red line, and as you can see, it was hit, rendering the trade a loser.